BlackRock is going to do what BlackRock is going to do.
Yeah.
They are the largest asset manager in the world. I told people for a year, there was no question in my mind. As soon as they announced they were going after the Bitcoin ETF, not only was it going to get approved, they were going to be first. Right. Now, they decided to crown them all at the same time, but and look, Bitcoin has, BlackRock has applied for an ETF in Ethereum as well. I think the challenge now is who has the bigger, stick, shall we say, and everything is political. Appointments of these, unelected people are by the current administration that happens to appoint them. It happens to be an election year. So, look, Ms. Warren is pretty anti all of this. Why? Well, my thesis, I won't put words in her mouth, but my thesis is you look at her largest campaign contributors, they happen to be large financial institutions that have a great deal at stake if they are disrupted. So it's not surprising to me that she would craft legislation to slow down the disruptive technology. Okay, the fact that it's an election year and that she's, look, show me who said it, show me the incentive, I'll show you the outcome.
There you go.
That is the way the world has always worked. And here's the problem, political problem, as I see it. It costs, from what I've read and studied, about $100 million to secure a Senate seat in the United States. $100 million. Most of us don't have that. So if we want to run, unless your name is Meg Whitman, who spent $103 million or $108 million, I can't remember, of her own money.
Yeah.
She lost, unfortunately, but she spent over $100 million of her own money. Unless you're her or someone like her, you have to raise $100 million. Well, it turns out if people write you $1, $10, $20, $50 million checks, they expect something.
Yeah.
And that's the way our system works. Definitely FUD, definitely fear, uncertainty, and doubt. That is how the incumbents deal with technological innovation, right? So blockchains are the future of computing, full stop. And they're not, the technology is not going away. And I've been shilling this book, that Chris Dixon wrote, Read, Write, Own, for anybody who wants to understand why, this thing that I've been talking about for almost 10 years, about the cycle of technology, from the mainframe to the microchip, to the personal computer, to the internet, to the mobile net, and now the truth net, which is the internet of blockchains. And why, AI is not it, right? AI is a tool. It's been around 75 years. It ran on, big computers, and it ran on personal computers, and it ran on the internet, and then it ran on the mobile net, and now eventually it'll run on blockchains. I will say it's a 75-year overnight success story. But the FUD, the fear, uncertainty, and doubt, is spread every single time there's an innovation in technology that threatens incumbents' livelihood. So you go back to the internet, right? AT&T and Verizon tried to kill, literally, the internet because they didn't like what you and I are doing right now. Voice over internet protocol is free. They charge $3 a minute for long distance. We're far away from each other. And they liked charging $3 a minute for that. So they tried to get a bill passed, and they spread all these rumors about how the internet was bad. And the same thing's true now. The banks are being disrupted by these chains. And financial services, as we know it, which has had a good 838-year run under its current form, based on trust, is being displaced by truth. Blockchains give you truth. And therefore, as we think about, how would you stop these chains, these innovations from happening? Well, we'll over-regulate them. Well,
Yeah.
but you don't have any jurisdiction because they're not securities. Well, then we'll classify them as securities. Or we'll try to classify them as commodities and get some other regulator to, collaborate, to work with us. Well, they tried that with Bitcoin. They tried to over-regulate. They tried to regulate by attack on, new technology and new innovation. And what happened? The courts said, Gary, you've overstepped your bounds. And now we have Bitcoin ETFs, and they're part of the culture of the future of financial services.
For sure.
So now next up is Ethereum. Well, Bitcoin is better money, right? It's a blockchain application for digital gold, or as Michael Saylor says, digital property. That is the future of money. Okay, great. Ethereum's different. Ethereum is the future of global compute. And you've heard, Sam Altman and others say that compute is the most valuable asset in the future. And that's true. So that's a long-winded way of saying it's FUD, it's expected, and the reality is the courts forced the SEC and Chairman Gensler to approve the Bitcoin ETF.
Yeah.
There has been no such court ruling, no such lawsuit to force his hand on Ethereum.
Right.
Therefore, he can do all of this, FUD campaign to make people afraid that it's not going to happen. And as we all know, people will buy the rumor, whatever that rumor is, whether it's new technology adoption, whether it's new chips, whether it's new products, and then some of them will sell the news. And so you'll get this run up in price. And then if it doesn't happen, or it does happen, they'll sell out of fear. If it doesn't happen, they'll sell out of, I'm going to take my profits if it does. And we saw that after the Bitcoin ETFs, and then they went back up. And now there's been some, downside pressure. Ethereum ran along with it, got all the way up over $5,000 and, or $4,000, sorry. And now, bam, it's back down again. So I definitely think it can continue. I think we've seen 12-ish billion of net inflow over the 8 weeks or so. I think that absolutely can and will continue. Do I think it is likely to accelerate, not decelerate? Yeah. And the reason is we still don't have all of the wirehouses and independents with full approval of the ETFs for their advisors. We still don't have all the education resources. There's going to be volatility, right? I think the volatility that we're experiencing now, talked about this, right after Chinese New Year, every year after a big year. So 3 out of 4 years in the cycle. So not on the down years, but on the 3 up years, you get 2 drawdowns in the first half of the year. One around Lunar New Year, because people in China need to cash out to fill up their red envelopes with cash, with renminbi. And that happens like clockwork, and it's a big place. Second is around tax time for the US. So kind of, Ides of March through the first week of April, as people realize, oh, geez, I got to pay taxes on all that crypto that I traded last year because it was up, 155%. And there's natural selling. And so that in the short run swamps the inflows. You got the added challenge that GBTC made a decision, which I don't fault them for in terms of being money grabbers. You got a captive audience, most of which came in at 6, 8, 10 grand Bitcoin. So they have huge capital gains. If they sell, they're going to incur big taxes. So it was highly unlikely they were going to sell right away just to save 100 basis points. But if it was in a not-for-profit account, an IRA, retirement account, those were going to get sold. And that was bang, 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 the first few weeks of withdrawals. Now there's some arbitrage going on out there that people don't pay attention to. Interesting thing is financialization of this market is good in so many ways, right? I said all along, if the only purpose of Bitcoin is to put it on your ledger and bury it in your backyard, we can all go back to our day jobs because we have that. Sure. That's called gold. And it's been good for 5,000 years. But what people don't think about is that gold isn't just the few bars or coins that you stuff in your safe at your house as running money. It is the base layer of money. Every central bank in the world owns it. They issue currency on top of it. Mm-hmm. And the same thing about Bitcoin. If Bitcoin wants to be digital gold, digital property, right, eventually take on real estate as the great store of value, then it needs to be deposited. It needs to be lent out. It needs to be borrowed against. It needs to be financialized, meaning people can borrow against it. They can decide if they want to rehypothecate it or not. We need rules and regulations like the banking industry has. So the future of finance should look like the past of finance, and violators like Bear Stearns and Lehman and others should go bust, and we shouldn't bail them out, by the way. Ultimately, we are on the right path and the right trajectory, but it's never a straight line with no bumps or hiccups. Let's call it 500 million. 500 million comes in, and a bunch of it goes to IBIT, the BlackRock. They, at 359 today, will, they'll set the price for their ETF, and then they have to go acquire X Bitcoin, however that is. The problem is only 900 Bitcoin get created today. If they got to go buy 1,000 Bitcoin, that's more than 900. So they got to go convince someone to buy it.